So what could be a fair valuation for a Bitcoin? That's a very difficult question. I have gotten asked this question hundreds of times, and I'm always trying to not answer this question because you just can be wrong. So let me try to answer it indirectly. You have Bitcoin back in 2019. At that point of time, Bitcoin has a market cap of 190 billion. And you had other assets, 2019, for example, Apple, close to 1 trillion, gold, 8 trillion, US money supply, M2, 40 trillion, stock markets, and so on and so forth. And the question now is, to what would you compare Bitcoin? Would you make Bitcoin something like a tech stock? Then you would have to compare it to Apple or to the entire stock market. Or would you like to compare it to money, which is, Bitcoin is no money, right? Then you would have to compare it to the money supply. But given what we have discussed previously, the best analogy is gold because of the entire architecture behind it. And therefore, it makes sense to draw comparisons between Bitcoin and gold. And the question now is, what is a fair share of Bitcoin relative to gold? Back in 2019, the share was 2.3%. In 2021, the share was 10%. Now the share is down to, say, 6%, something like this. And that's now the question people from both sides, Bitcoin enthusiasts and also traditional politicians and bankers are posing. Some people say Bitcoin is thin air, therefore the share will go down to 0%. And the Bitcoin enthusiasts say Bitcoin is not just something like digital gold, Bitcoin is the new gold. And the share is 100%, right? And therefore you come to these huge differences in judgments. And therefore it's not possible to judge a future price of Bitcoin because everything can be possible. But who knows? Maybe 20% is the right share. Maybe 30% is the right share. Who knows? But even then, this would mean a price increase of Bitcoin. But you have to pose the question right. And the right question in this would be comparing Bitcoin to digital gold from a conceptual perspective, right? Yeah. And maybe to close it, that's the last slide. I would like to show it to you. That's the so-called stock-to-flow theory. The stock-to-flow theory has two sides of the medal. One medal is basically judging an asset. That's what I do. And the other half of the medal is extrapolating the future price from this judgment. That's what I not do because this is really pure speculation. But it's fascinating to read it. Go to the internet and read it. But I'm not doing this type of speculation here because it might be unsolid. Who knows? But let's do the first half. That's basically judging assets and commodities with the stock-to-flow metric. So how does it work? Gold is a commodity, and there are existing 185,000 tons on the planet. And based on gold mines, there are 3,000 tons new to the world per year. Now you're computing the ratio, stock-to-flow value. It's very easy, standard mathematics. The ratio is 61.7. In case you use the other metric, then you can also say that the supply growth is 1.6%. That's basically the inherent supply growth, or let's call it something like inflation rate. It's not the inflation rate, but something like it, of gold. You can also do exactly the same for silver, palladium, and platinum. And there you see something interesting because the stock tells you that palladium and platinum is rarer on Earth than gold, but it's not necessarily scarcer than gold. Yeah, so you see here the numbers. There is less palladium on the planet than gold, but you also see the inflow of new palladium through mining activity, which is 250 tons. That means scarcity is not given so much with palladium because mining activities have really increased. That means the stock-to-flow value is 1.1, or with silver 22. And people now have said, okay, this stock-to-flow metric is a metric to measure scarcity of assets, and the higher the metric, the more scarce is an asset. The lower the metric, the more weak this asset is. That means from this list here, gold is the most scarce asset of these commodities which are measured here. Now let's add Bitcoin in case you can compare it with a commodity. My argumentation is that this works. Other people would say, no, you cannot do this. End of 2022, there have been 18.9 million Bitcoins. there 3.2 million bitcoins inflowing. So, sorry, there is one zero too much. One zero too much. I've never seen this error previously. But you see, with Bitcoin having a stock to flow metric of 57 or a supply growth of 1.7. And now it gets exciting. The euro, the pre-corona area, was quite stable. Deutsche Mark, Swiss franc, all kinds of currencies, dollar have also been quite stable. Central banks even had to fight deflation. So you could argue, it's now roughly speaking, the inflation was 1%, and then the stock to flow value is 100. This is now mathematically not perfect, because now I'm equaling supply growth with inflation, right? This is what you actually should not do. But for illustrative purposes, it's still helpful, because I want to get this message out of this chart. Yeah, but actually, theoretically speaking, you should not set supply growth to inflation rate. We just do it to get some rough insights here. So what is the implication of this chart? The stock to flow metric of euro is higher than gold. That means the euro is a harder asset. It's more scarce than gold. Yeah, but with the assumption I just made. That means in the pre-corona area, was there a need to switch your value from euro to gold? No, because the euro was fairly stable and quite hard. So therefore, there was no rush to gold, but it changed a little bit when Corona began. Because now, when you, for example, compute the numbers again for October 2021, we had an inflation rate of 4 to 5% there. That translates to a stock to flow value of 22. And now things start changing, because, as I said, with the assumption of putting inflation equaling supply growth, which I should not do, taking this assumption or accounting for this assumption, you can now see that with rising inflation, the euro is getting weaker than gold. And what did you see? People are now starting to purchase here and there some real assets, including gold, some commodities, and so on. Why is this? Because you see traditional currencies weakening. And with Bitcoin, you can now compute the stock to flow metric in the future, 2023, and so on. And then you remember this blue-shaped scarcity curve, right? This will be interesting because in 2024, that's 1.5 years from now, Bitcoin will change its supply schedule and it will reduce the number of Bitcoins being generated. That means by then, that's a fact, right? That's not speculation, that's a fact. By then, the stock to flow metric of Bitcoin will be 122. That means by then, the Bitcoin stock to flow metric will be double as high as the one from gold. So by then, Bitcoin will have gotten one of the scarcest assets on the planet, even more scarce than gold, right? That's the stock to flow metric, to basically use one metric to analyze the scarcity of an asset. Should we do it? Should we not do it? I think in case you are clearly knowing the assumptions and the limitations of this model, it's okay, but it's also a supply side model, right? This model is not at all taking into account the demand side effects, because somebody has to purchase all these assets. Somebody has to purchase euro, gold, Bitcoin, and so on. Then the model is not accommodating technical risks. Yeah, we talked about it earlier, platform risks and so on. This all not in there. But knowing these assumptions, it's basically okay to do some implications, but you always have to have these limitations in mind. But it's interesting to put all these commodities or assets in a row and compare them by their scarcity metric. Yeah, regulators, do they like it? We talked about it, right? We have good laws coming up here in Germany and on the European level, same in a couple of other European countries. I think the US will also do a good job, because the main spirit of the lawmaker in the Western world is not banning everything, but rather have the freedom rights in mind, but creating limitations of what you are allowed to do. And that's basically a very solid way. It's different in other countries where Bitcoin is then being tried to ban, Nigeria and other countries, China, where some people are then still using it, even though the country has banned it. This chapter I will now jump over, but maybe Christoph tomorrow will refer to it. So maybe you go quickly through these slides. They are self-explaining. Tomorrow in the morning at breakfast should take you 10 minutes. Yeah. Let's now close it. Sorry for exceeding. We had technical issues in the beginning. I'm very sorry. Let's stay in touch. Definitely, we have all these IT tools from the Frankfurt School. We have email, and we have the networking evening today. I have now skipped one topic, which was a deep dive into Bitcoin mining economics for time reasons. But I will add this maybe then in January. You know, that was a deep dive in mining. That's not so important for now, but I think it's important that you know how mining economics work, and we can also do this in January as a separate section. Perfect. 6 o'clock. I think let's now move over to the other rooms, mingle with the other students, and hopefully you had a nice evening. Keep in mind, you know, it was the introduction to give you some quick insights to speak with other people. And from now on, tomorrow, you will hear much more deep insights into hashing and consensus algorithms and so on, creating all these technical foundations. Okay, thanks much, and see you in a second.